Well, your streaming service just lost $387 million, ha!
Woof! You don't talk to me like that! You little piece of shit! Get the up! Get the up!
What's going on, everyone? Jeremy here from The Quartering, and we had the earnings call from Disney yesterday, and it was actually not too bad for them, to be honest with you, except for a couple of pretty interesting nuggets around the continued failure of Disney Plus, the continued disinterest in customers in buying their woke trash. And of course, we haven't really seen the long-term effects of the upcoming box office disaster that is the Marvels and any future films this year as well. But I wanted to go over some of the things they talked about as they continue to have massive cuts planned, another $2 billion in cuts, which of course in general results in either sell-offs, more layoffs, things of that nature going forward. Before we get into all the hilarity around the epic crumbling of Walt Disney, a quick word from this video sponsor. Huge shout out to this video sponsor, Private Internet Access. Look, in current year, everyone basically has to have VPN. It's a extremely versatile and now basically required tool of browsing the modern internet. And that's why I'm happy to be partnered with Private Internet Access and have been for over a year now. It's a VPN I use, it's a VPN I recommend to my friends and family, and I have a massive discount for my viewers. In short, a VPN allows you to change the location that you may be seen as browsing the internet from. This helps you unlock television shows and movies that might not be available in your area. It allows you to browse the internet anonymously. Heck, even right now, we just saw several countries, for example, Google and Meta are now blocking news in Canada. And well, how are you going to get your news? Well, you could change your location. VPN helps protect your privacy, secure your data, and bypass network blocks. It comes in extremely important all the time. That's why I have it on my computers, laptops, and mobile phones. Private Internet Access is an open source app with no usage logs, unlimited bandwidth, high-speed global server network, dedicated apps, powerful encryption, and 24/7 live support. Unlock the power of the internet and stay censorship-free by using my link in the description below and get yourself Private Internet Access today at a massive discount. If you don't already have a VPN, make sure you get Private Internet Access. It's what I use on my computer, my laptop, my mobile devices. It's what I recommend to friends and family, and I've got a massive discount for you, so make sure you get that today. Disney expands cost-cutting plan by $2 billion, however, did post better than expected profit, which did lead to a pretty sizable stock jump. Over the last day, you can see pretty big spike from $84 a share up to $90 a share. It's a $6 per share jump. Now it's giving some of it back today, of course, but we'll see how much of that stays. That said, I'm mostly interested in the Disney Plus numbers because we've been reporting on that as well as the future layoffs that we're looking at. Disney earnings topped expectation thanks in part to profit at ESPN Plus and continued growth at theme parks, but a decline in ad revenue weighed on its top line. Disney also said it plans to continue to, quote, aggressively manage its cost base, increasing its cost-cutting measures by an additional $2 billion to a target of $7.5 billion. So what you're seeing is a massive fat trim, massive cost cuts coming. I've already talked about essentially what we're going to see is huge cutbacks in these movie budgets. Disney and Marvel, and really DC and any of these film industries, especially for superhero stuff, can't make this $250 to $300 million budget movies work anymore. When you open up on day one needing $700 million to break even, that just doesn't happen. Now, yes, there's Barbie, there's Oppenheimer, there's there are movies that do well, but the average earnings of the modern day Marvel film or the modern day Disney live action remake is far lower. In fact, if you look at it between Marvel, Disney's live action remakes, which is the only thing they seem to be putting out, and Pixar's unending string of terrible movies, really all three of their entertainment outputs in terms of cinema have completely tanked. Now, of course, investors were excited to hear that they were going to do a lot more deep cuts coming. Now, the decrease in ad revenue was primarily from ABC, Disney's ABC network and other owned TV stations, which saw a lower political advertising revenue during the quarter. Over the summer, CEO Bob Iger said the company could be open to selling TV assets. Meanwhile, the company added 7 million new Disney Plus subscribers, which is pretty good for the previous quarter, bringing its total number of users to 150.2 million, including Hotstar. The streaming business also narrowed its losses, but it still lost nearly $400 million. There's a lot of, when you look at the way the market reacts to the way the business actually is, they're not always in the same line. Essentially what they're saying is here, they're still losing hundreds of millions of dollars on Disney Plus. They're losing money on all their main, movie releases. Their action is not to get more profitable, it's to cut costs. There's really only two ways you can help that bottom line. You can either cut costs or add revenue. Well, ad revenue is plummeting. People aren't spending on ads anymore. I can tell you that on YouTube. My earnings for October were about half of what last October was. Now, views were down with the actors' strike. That's true, but not by the same percentage. Not by anywhere near the same percentage. Wall Street had expected Disney to report a total of 148 million subs for the quarter. The company touted the addition of theatrical titles as Elemental, Little Mermaid, and Guardians of the Galaxy Volume 3, as well as the new Star Wars series Ahsoka, as key streaming content during the last 3 months, which all had terrible numbers, by the way. Well, I shouldn't say that. Elemental did very, very good on Disney Plus. I'm talking, I guess, specifically about Ahsoka. The company continues to expect that its combined streaming business will reach profitability in the fiscal fourth quarter of this year. So they're going to cut $400 million somehow from that, which is nuts. You end up saying here, the revenue increased. You see Disney's experience division saw revenue jump. That's less, that's like the theme parks and stuff like that. That's mostly coming from massive price increases. This is a company that, again, Disney Plus sheds record 11.7 million subscribers, announcing price increases and password crackdowns coming. This is just 2 months ago on August 9th. They're going to get to profitability by increasing prices. You see Disney's streaming business lost $387 million in Q4 2023. That is not correct. It's Q3. It is Q4 now. So to crack reporting to Certo, and I think that the reality is, most people, I hope it gets worse. The only really streaming company that makes any money is Netflix. As far as I understand, maybe some of the smaller, maybe Shudder does. If you like horror films, Shudder is really good value. Maybe Amazon Prime does. It's tough to say for sure because their cost matrix is so spread across. People get Prime, but not necessarily just for video. They get it for 2-day shipping. They get it for Prime Music. They get it for all the other stuff that comes with Prime. But it's interesting to me that this is being touted as a win. This comes on the heels of obviously South Park absolutely crushing the Disney with their Pandaverse special. You see here again, this is back in May and August. So Q1 and Q2, losing 4 million subscribers, losing 11 million subscribers. How have they offset that? Well, they just make the ones that stay pay more. And this is a decent short-term solution. Of course, it's a nice revenue pop, but ultimately people get sick of paying for this stuff. We're headed into winter now. It's Christmas time. People are starting to budget to save for Christmas. A lot of these people forget most of the country, save up so that they can buy Christmas presents. They have to budget for Christmas. And when they realize that they haven't turned on Disney Plus, they haven't turned on Netflix, they haven't turned on Peacock or any of these other streaming services that are costing them $20 a month, they figure, oh, well, that's where I can trim. When you got to choose between putting gas in your car and paying for a streaming service you don't watch, I think it's pretty simple. I think there are a lot of positives for investors in that, Disney still is a juggernaut in terms of bringing in revenue just because of how diverse they are. But if you look at the direction they're going, you're seeing massive cost cutting, $2 billion. I mean, how do you get to that? I mean, you're talking about pulling programs. You're probably talking about another huge swath of layoffs. You're talking about, we saw this basically with Facebook, Twitter, anything in Silicon Valley over the past couple of years, past couple of months, they're ahead of us. They know that tough financial times are coming, especially in an election year. It really depends who wins. You know, if we get 4 more years of Bidenomics, I shudder to think, what people's floatable cash is going to look like, what their day-to-day budgets are going to look like. It's scary. It truly is. And, I'm not exactly sure. I think it's good that these companies are getting lean, but, when you have massive drop in ad revenue, $2 billion, you need to cut another $2 billion in costs just to get back profitable. That tells me this company was running immensely fat. They were running immensely thick against their actual costs. And heads are going to roll, not from the C-level. Of course, they're not going to blame Kathleen Kennedy. I wonder if they'd have to cut $2 billion if, Indiana Jones didn't lose $200 million, if Little Mermaid didn't make any money, or, had made money, if the Eternals had made money, if they thought the Marvels were going to make money. I mean, this is a product of all their projects completely tanking. And yeah, Disney's not going to crumble into nothingness, but it certainly isn't the juggernaut it used to be. It isn't as good as what it used to be. And we're going to have to see what happens with these new cost cuts, how they plan on hitting it, because I suspect heads are going to roll. I hope you enjoyed this video. Make sure you get that private internet access, and we'll talk to you again real soon.